Welcome to the Unpackers, the podcast of two boomers exploring the world of trading and investing, aiming for financial freedom and to make their kids proud. Join them on their mission.
And TradFi markets are looking very promising. First of all, there's no such thing as probabilities in trading. So basically what I always say, we have the data. The person is the algorithm. I only know what the data is telling and the reason is behind it. I love data.
Welcome to the Unpackers podcast. My name is Bart and I'm a trader on my way to success. My goal is to buy my son and myself a ticket to an FC Barcelona game, all paid for by my trading profits.
Hi there, my name is Ilko and I'm a data-driven trader. And sometimes I feel like I've cracked the code. Other days I feel like putting in some random numbers by my kids will be a great effort.
And my name is Jimonar. Bart and Ilko call me the Gen Z Moonboy and I'm here to help them to make their families proud.
And today we have with us the one and only Marnik Verschoor, but I think you all know him better as Sergio Tesla. Welcome.
Thank you guys. Thank you very much for having me again. It's good to be back and congrats on the really nice studio.
Nice upgrade.
A nice upgrade indeed.
Yeah, it is.
We are advancing. So as you, because the last time that we spoke to you, you were actually still called Minoma.
Yeah.
We'll get to that in a second.
Yeah.
But I was just wondering, since the last time that we spoke to you, what is the most surprising thing that you've learned from, digging through statistics all day?
The most surprising thing that I learned, I think, is maybe not the most surprising, but that it's very difficult to onboard people on the journey to data-driven trading, and that I think is also something Yip has opened my eyes towards, and that it's the biggest challenge is not to present data, but to help people interpret the data. So, we'll get into that a little bit more, but that is really because I remember the last time I was there, it was still Minoma, and I thought like, well, yeah, it's easy. Like people need data, but then also thanks to Yip, I figured out, okay, it's not that people need data and people need to understand how to interpret data. So that's, I would say, if I would really consolidate it into one thing, that's it.
Yeah, because you're a little bit in disguise here. I even see in Discord servers, I'm wandering around Discord servers as well, like everyone else. And I see that, Yip from Brighter Data.
Yeah.
You really changed your role every now and then. So I think you've done a good job there.
Yip wears a lot of hats.
Yeah.
He does, actually. How you are today sitting here? More as Brighter Data or more as Tribe?
Oh, today I'm sitting here more as Brighter Data, of course. Yeah, because we're trying to build Brighter Data together. So today I'm wearing the Brighter Data hat over here.
What is your role, official role now?
We determined a few weeks ago that it's now co-founder. Actually, I still consider him as the only founder, but he was like, yeah, you just because we also rebranded and etc. That I'm just trying to help build Brighter Data. Basically, there's not really a role that fits into it. We just do it together. But he's the main man, the main guy. The brains.
Okay, but take me back to that point, because last time you described as well that you were you were a builder in the space. That's how you wanted to be known. You had the system figured out of all this data that you could derive patterns from, but it wasn't self-explanatory, or people did not pick it up sufficiently enough. What was your struggle there?
Yeah, well, the main struggle is indeed that it was very difficult for people to pick it up. And in hindsight, it was also very obvious because for me, it was like, okay, yeah, but you can use this and you can view this and this with the data. But obviously for me, I've spent a lot of time thinking about this data. I've come up with the patterns, there's like a whole years of process behind it. So obviously for me, it's easier to understand. And I think for me, it was difficult to really place myself in the perspective of someone who hasn't gone to all that. And then at some point, Yip just told me, like, he said, dude, like, one of our stop words was like, delete. Because he said there's way too much information in this shit. Because I just thought, like, yeah, the more data, the better, So I was like, yeah, I'll put some data here and then put some data here, like a graph here. And at some point, Yip just told me, he said, man, what is this shit? What are we looking at? Like, what is this for? Nobody's using this. Delete. So then we had to, we deleted a lot. I think we honestly deleted 80% of what was
we set
on
up
the
the form first, the feedback form.
We did a feedback form to ask people like, hey, what are you actually using? Then it turned out like 20% of the platform was actually being used by members. And Yip already told me, he already called it before we did the form. He said, I'll bet you that no one's using this. And of course.
Yeah, but it makes sense because Marnik often tends to think that everyone is a data scientist or that everyone is as intelligent as Marnik, which makes sense that you think about it that way, especially if you also build a platform yourself. But coming in as someone completely new to data-driven trading or using statistics to help your trading, seeing the platform can be quite overwhelming. Even now it still can be, but imagine like a few months ago when there was
if I look back at the platform back then, I'm pretty shocked. So, yeah, that's pretty. It's very overwhelming and very non-intuitive, and we've tried to do a better job, but there's still work to be done. But I think we've already made quite some steps.
Even at a certain point of time, I was typing you in an X message that it could even be a product in itself, not to have the data of the dashboard, but the sort of the conclusions for the day. Because literally, I've got a retail person has got so much stuff on his mind, like everyone else. You've got that window of a couple of minutes, mostly, in the train or in the morning routine, whatever, and then, okay, tell me what you see, sort of, and then you can determine whether you want to, as a person, you want to adopt data-driven trading or not. But almost, I mean, your snippets have increased, the data so much for me to what gets out of it.
That's also why we make those posts, to help people to learn them how to interpret the data, because that's the most difficult part. We can now have a look at the platform in the morning with our morning coffee. In a second, we know what's going on. But when you're starting out, you need to get used to the different use cases, the different data that is being presented to you, the different statistics that are being presented to you. And then there's many different ways to interpret the data, So there's not a one-size-fits-all, we always say as well. So it's not really possible, even though we also know a lot of people are looking for something like you are asking right now, basically an indicator. But that would not be right, because there's many different use cases to be found in the platform. And I don't even think that, if I would have to speak for myself, that forming a bias is the best use case the platform offers. For example, for me, the best use case of the platform, I've said this many times, is filtering out low probability trades. Yesterday was a prime example where my stop loss on my long on Bitcoin got hit. And I made a video on YouTube and also said in Discord, if my long gets stopped out, it's so obvious to me that my bullish bias for this weekly candle and also for the remainder of the month is invalidated. So I won't be looking for longs anymore, but I'll flip short. And the people on the X are like, yeah, but earlier this week you were posting that you were bullish on Bitcoin. I think you had the same response.
I had the same thing,
yeah. But I was like, but as a trader, you cannot predict what is going to happen. You can only react to what is happening. So as soon as my bias got invalidated because we made a new weekly low to the downside, I already knew, because I know the data from the top of my head, if we make a new weekly low on Thursday to the downside, Monday high will hold for the rest of the week. And there was a lot more room left for more displacement. So I knew we were likely going to go lower. So my bias flipped short. This time I couldn't get into a short execution because we swept a low and we dumped a lot lower straight away. But Yip from 2 or 3 years ago would have been stopped out on his Bitcoin long and be like, we are near support. I'm going to look for another long. Maybe not on Bitcoin, but maybe on Ethereum,
Especially because they had a nice little bounce on
the
sweep. Yeah.
You saw the sweep of the low and it got a nice bounce to the upside. And there were so many people that then assume, okay, we sweep liquidity into support, range low. This is a nice area for a bounce. And then during New York, bam, it went much lower. Why? Yeah. Because timing of price and also distance of price were just so strongly in favor that as soon as that low got taken out, which is why I had the stop loss of my long, so I lost some money. But 2-3 years ago, I would have probably looked for another long yesterday or today maybe. And now I just know, okay, we're continuing lower for the week.
But you were in that long based on how the chart looked like, or based on the data, or both?
Both. Yeah, so I started building a bigger swing earlier this week. And then we formed a pivot to the upside on Monday and a pivot to the downside on Tuesday or on Wednesday, I believe, or on Tuesday. I can't really remember. I knew, okay, we're breaking structure back to the upside. So that was my trigger to tighten my stop loss and add another long position. And I knew as soon as we now take the low, that brought us to that high that gave us the market structure break, based on time and distance, if we break that low, it's game over this weekly candle for the bull. So then my bullish weekly profile that I made at the beginning of the week would be invalidated, and I'm assuming that lower prices are likely, which also happened. So it was a very good decision of mine to tighten my stop loss and also to add margin. If I do this 100 times, more often than not, I will be right and I will make money. This time, buy is going to validate it, push down lower, but I'm totally fine with that as well because I was just playing the probabilities, and now I didn't get into a short up on that bounce, but there are weeks where on Thursday then you bounce, people get bullish again, you close the daily, and then on Friday morning you short, and then Friday puts in the low of the week because it was still today the same happening. We make new weekly lows, even though Bitcoin had a nice bounce. Many people were long again, And now I was just checking right before we started the session. It's Friday afternoon, and we are already making new weekly lows to the downside. And those are the low probability trades. Talking for way too long now, but those are the low probability trades that the platform and the data and statistics are helping me to filter them out, which makes sure that my win rate increases and my profits increase. So a bias, that's the point I'm trying to make.
Bias, invalidation.
Yeah.
I see why you hired him as a chief of growth or co-founder.
Amazing, man. I don't have to do anything about that part anymore. I just now crawl into my little program cave, like coding. That's what I do now. Don't see the sunlight anymore.
Well, I guess you have some KPIs and to determine how well he's doing. In terms of growth of people onboarding, how's that? I don't need exact numbers, but how's that curve going?
Yeah, very well. We have a very nice, steady growth curve for ever since we began. It's just up. So the growth's really nice. We still have some challenges with especially like our retention rates for long-term members, and when long-term I mean people who stay for 2 months or longer, is very high. But you see that the people that there's a higher churn on 1 month. So that means that there's obviously a difficulty for people who on board in the first month to really get a grasp of okay, how do I use it? How do I use data? And once they figure that out, they're inclined to stay. But that first month's very critical. So that's still something we're improving, and I think we're making big steps. But yeah, our growth curve is very solid. We're I think about 3 times bigger than the last time we spoke now in terms of users. So it's going very well, and it's nice to see. And it's nice to see it's very fun to see a brand grow. You guys probably have that as well. But it's becoming a term. It's just very cool to see people now. You're doing QPA, quantitative price action. That's really cool to see it. So it's almost becoming like, I wouldn't call it an ideology, but somewhat like there's some movement crawling out of it. And yeah, I find that pretty exciting. So the growth curve is doing very well. Our challenge is still the 1 month churn, and
it needs to be customer service as well, sort of.
Oh no, I wish, man. I'm doing customer service.
He's doing the customer service.
I'm spending too much time on it. Yeah, no, I'm doing customer service with one guy who's part of the team, Omniscience. Yeah, we're doing the customer service.
And is this people all over the world, or
yeah, all over the world. Yeah, global.
And your focus is crypto, but you have added already more assets.
Yeah, we've now entered stocks as well. We've entered Forex. We've entered indices, but not like the future indices. So just the index itself that's opened on New York Open. We do want to add futures as well. And yeah, I have to say, it's just that I really think stocks are super interesting. If you look at the statistics, right, we're digging into some things, into some potential algorithms with some stock data, and it's actually really promising what you see. It's just
what do you see? Did you just take us into some?
There's more. Well, you can, for example, I will just name it because you can see this on the platform. But for example, if you take the New York session on Bitcoin, then you see that I think in the first 30 minutes, maybe 20% of the first, high or low is put in the first 30 minutes of the New York session. Then you go to, for example, to Tesla, which is, obviously a stock. And you see that the first 30 minutes, like 7 or 80%, 82% of the first sessions put in the first high or low within the first 30 minutes. So that's a huge difference. So you can see there's, for some reason, and it's funny because I've read that before I started adding stocks, that apparently time is more important in TradFi markets than it is in crypto markets. And you can see that in the stock market as well, if you look in the data. So, there's obviously many edges you can come up with if you know that the first 30 minutes puts in probably the high or the low. And, I'll leave that up to people's imagination. Sorry, going to do that.
Yeah, we're going to. I see,
But
a branded setup coming here.
No, we're working on something, in the stock market. So and that just looks very promising. It just seems that in that respect, there's a lot more patterns to it and a lot more predictability than it is crypto, which kind of makes sense because crypto is so much of a lesser liquidity market and so much easier to move and more price swings. So. From what I've seen so far, the stocks and TradFi markets are looking very promising.
Would you have started differently, so with TradFi data in hindsight?
No, because I love crypto, and it's it's a thing that it's pulled me in, and I've loved crypto since the start. I'm a big believer in crypto still, so crypto is still more of a passion for me than stocks. So I do think in the end, all the because it's funny because I think Tesla is very promising, and I want to start trading Tesla, and sometimes universe works in funny ways because my name is obviously Sergio Tesla, which is not a reference to the car brand, but it's a reference to the Nikola Tesla.
Herewith noted, yeah.
Here and but it's funny that now it's like, yeah, okay, maybe I was destined to trade Tesla as well.
yeah. Thank you for picking my line already, but yeah. Okay. Yeah, I'm definitely one of those retail players who still finds it difficult to grasp data-driven trading.
Yeah, but you've tried the first Minoma platform as well as the new Brighter Data platform, right?
Yeah.
Or looked into it, I suppose. Like what's?
Well, we're in a different era, indeed. I mean, and definitely your movies are helping a lot. If you've got some other adepts in this world that are really from the beginning. Using this data, so the platform is way better, way user friendly. That's
what's the biggest. It's also interesting for us to know, but also for the people that are watching this episode. Like when you want to start using data and statistics, because I'm assuming that you want to kind of use it for your trading, right? If not, you probably wouldn't have had a look at the platform and the data and statistics. You would be interested to potentially use
interested and intrigued.
Yeah.
And I remember because it was 1 year ago. And I remember you saying, Bart, you make life far too difficult because you just should accept that certain stuff is happening and trade the probabilities. And actually, I'm still at a certain stage where I should go full in at a certain pattern. And I think that, my frustration is that my journey is taking way too long to find a way of trading next to a day, a job and kids, whatever, all that stuff. But I'm talking way too long. And I did a personality test the other day at my job that was an obligatory, and I think it was our yellow person, and I want to understand everything.
Yeah, okay. Yeah.
And we've had this debate before, but I'm going to a question here. Is basically, I still want to grasp that what is going on, and especially now we are in a danger zone. We're in extreme premium. Is then data perhaps acting differently than when you're in extreme demand?
Yeah, no, definitely. I think that's a very good point, and I think it's also something I always try to explain because, for example, we measure different events, and it doesn't matter if you use our platform. It's not even specific to Brighter Data. If you measure events, or let me actually backtrack it. First of all, there's no such thing as probabilities in trading. I always stand by that, and it might come as a surprise from someone who's hosting a statistics platform. But the best thing we can do is create estimated probabilities, because the thing with real probabilities is that all variables must be known. For example, if you have a coin flip, then you have heads and tails. That's your two variables, right? You flip it, it's either heads or it's tails. So you know that the probabilities are more or less 50%. And the thing is with trading, you're never going to get that because there's so many variables. If you were to create a system with all different kinds of variables that are possible in the world, well, simply it's infeasible because it's way too many. And there's also many unknowns. There's many unknown factors that are being applied to the market. What's important today might not be important tomorrow. So you're never going to have the full set of variables able to say, okay, this is an actual probability. So what we do instead is create estimated probabilities. And the best way we can do that is to measure different events and somehow combine them. So for example, what we do is measure, okay, when is when are highs and lows being put in, and how far do we use the displays in like the very simplest of terms. And you can use parts of that to create a system that works over time. But it's important to understand that it doesn't explain everything. It doesn't explain every situation. It doesn't explain every type of market environment. And it's never going to be able, you're never going to have a system that's going to do that, right? And that's when you come back to the thing of probabilities, that you also have to accept, you know, that sometimes it will work, and or most of the time it will work, but sometimes it won't. Or, well, it depends on your win rate, I guess. But for example, back to your point of like, okay, for example, now we're at premium. Will it work differently? Then yes, like some of these things will work differently. And in an ideal world, we would have like a classification of, okay, price is now trending up, price is now trending down. And then we could like classify it, okay, well, we are acting, or price is acting differently within these different, for example, price is going higher when price is trending up, price is not going as high if we're ranging. But the simple fact of the matter is that it's, well, very difficult to classify the markets like that. Because if we would know, even if you could do it in hindsight, if you would know at the start of the day that price is going to be trending up, none of us would be sitting here, right? Because we would just buy and that'd be it.
Back to the future material, yeah.
So there's a problem there, you know. So in an ideal scenario, we would know, but we don't. So the best thing we can do is get general estimation. That's also why I always say, don't say there's a probability. That's what me and Yip have had this discussion a lot.
Yeah, I throw that at him. Yeah.
Because I always say, and don't call it like, I know some people do it, and I understand why people do it, but I am very careful with saying that, because it's not a probability.
Estimated probability.
And I usually say like, okay, well, I usually say, okay, for example, right now, 2.4% of the months. Did it already take out the monthly low? I don't know. I didn't check. 2.4% of the months would take out the monthly low after putting in the monthly high on the after the 15th trading day of the month. So you could say, okay, there's a 2.4% probability of taking out, but I wouldn't agree, because obviously right now we are very close to the low. So, you know, the simplest example I can give, imagine we would be 30% above the monthly low. That metric would be 2.4%. Like only 2.4% of months would go down and take out the low. But do you think that the probability is going to be higher to take out the low when price is 30% above that low, or as in right now, 2% above the low? The real probability is probably going to be a lot higher when you're just above the low, right? And that's because we're only measuring one event. In this case, this is time, and it's completely valid to do. You can use it to get a good grasp of what's going to happen, but you have to apply context, and that's still like a manual thing. That's something we have to apply. You know, members have to apply that ourselves. So basically what I always say, we have the data, the person is the algorithm. So for example, Yip is the algorithm that's applying it very well. But yeah, I'm always very careful with saying probabilities, because I don't believe there's such a thing in trading. So I just say historical occurrences is what I usually stick to. So 2.4% in this case, to you know, solidify it, 2.4% of months would take out the monthly low after putting in the monthly high that late in the month. But that's not the same as a probability, you know, because maybe because of what's happening now, the probabilities are actually a lot higher.
I can so see why you need, you know, people to really be motivated to go past that month. that's you really need to believe in it, dig into it, and do you see a lot of people, you know, coming up with a separate account for a certain strategy and then only trading a certain, you know, data driven on that account? Is that something that you see a lot?
Well, you see more and more. I've actually started developing a purely data-driven system now. I just started doing it because we've been, and it's also been my goal, right? Like my goal over the next 2-3 years is to really develop a fully data-driven system. I don't think we're there yet, but I think we're getting very close. And now I've started developing and forward testing 2 systems that I think come very, very, very close, if not, well, almost entirely. But to really test it, we'll need to automate it. But you do see people come up with very cool systems. But I would say generically speaking, most people are not just doing it purely data driven. And that's also what I always say. If people ask me, hey, can I purely trade off this? I would say, no, it works best if you have an existing system and you apply it to your existing system. This is, for example, what Yip is doing. But we do want to get there.
But how does your automated process look like then in your ultimate dream?
Bots trading.
Yeah, that's
Deposit money.
Yeah.
get rich sleeping, right? Is that,
Yeah.
that's that?
Yeah, well, so that's also one of the reasons why we're gonna. Well, first of all, I don't want to sell any dreams. I think bots
Please do.
are. I think,
Let's go.
Subscribe to Brighter Data next year. Yeah. No, I think bots are very viable, but I think I kind of see it the same as building a business. You have to put in a lot of time and a lot of effort. And at the start, you won't see anything. You won't see any returns. And then at some point, when it's running, it will generate you money. But at that point, you had to put in a lot of sweat equity to get to that point. I see bots as the same thing. I think it's viable. I think you need to put in a lot of work to get there, to get a good data set. That's what we're doing right now. And then, probably early next year, we're going to start building an API so that we can get it accessible to bots and that bots can start using our data. And, by that time, I think we're able to build something pretty cool. Like I said, we already have some tests going and it's looking very promising. But that's the work. That will be the result of years of work of collecting a good data set. And then even if you have a working bot, you have to keep managing it. But that's also where the API comes in, because it will, track statistics. And since it's automatically updated, the statistics will change. But it's I'm a firm believer also in just first doing it and then seeing it, because who knows, right? In practice, things matter more than in theory. But I do have a good belief that we're going to be able to do something cool. And the added benefit is that it completely reduces emotions, because it's obviously one of the biggest deal breakers in trading is like, okay, not acting on your emotions. If you're able to define a good rule system on a bot, and that's the most difficult part, defining a good rule system, it's actually very difficult. But if you're able to do it, then it will just they always say you have to have a system and execute like a robot. Well, that's exactly what the bot will do. It will literally execute like a robot.
It is a robot.
It is a robot. Yeah,
right.
That's why it's
So
executing.
you just mentioned there is a certain kind of trading system, different trading systems. Is there any system in which Barter data does not have any added value, or can you apply it on any system?
No, definitely. I'm definitely. There's plenty of trading systems where probably it won't work. I think the most important thing is that trading is a very personal journey, right? Everyone has their own system. No one's system is probably going to be identical,
right?
Even if I would learn from Yip and Yip would teach me everything he knows, I'm probably still going to have, in the end, make some tweaks to make it fit my personality. Sure. And there's probably infinite systems out, or almost infinite, as many systems as there are traders, almost. And there's going to be plenty of people who that our current statistics don't work well for. So I think, for example, that if you're we do have scalpers. But I think, for example, that, for me, for example, my system that I'm building now and that I'm mostly doing because I want to turn it into a bot is that it's mostly breakout trades and continuation trades. But for some people, that might not be their strategy at all. For example, what we don't catch with statistics is, and I'm just not a fan of it, catching absolute tops and absolute bottoms. I know that is, the holy grail in trading, and it's very sexy to
post these tweets.
Finally short the very top of the bull market, right? There's been many top calls so far, but our system won't, or at least our data would not allow you to do that, because the thing is that, if you're taking an example of a extreme example, obviously, of the top of the bull market, that is a very rare occurrence, right? It happens once in a cycle. Like the absolute top that will set in the bear market happens once in a cycle. And since our system focuses on events that happen more often, automatically you're not going to catch this. So if I look, for example, at the system I'm developing now, it doesn't catch tops, it doesn't catch bottoms, but you will see, for example, now on the recent, we had this downturn, that it doesn't catch the top. Actually, it's like the system tries to short or long the top, and then it doesn't play out. It's break even, and then there's a confirmation of a breakdown, and then like only after that does it signal short. So if you're a trader that trades reversals and really want to get in on the top, and I know there's gambling there. I mean, maybe some people have a system for it that works, but like the data that we provide is not gonna help you.
Well, I struggle a little bit with manipulation in the crypto markets. there's a lot of, well, I guess, I don't know, no one looks again behind the scenes, but if I can believe people on Twitter, there's a lot of manipulation. That's not a constant factor in the crypto market, I would assume. Please correct me if I'm wrong. So that doesn't mean it's the constant that your data can pick up. It's not a pattern they can pick up. How would you view this?
I mean, maybe it is, maybe it isn't. I honestly don't know. I only know what the data is telling and what the reason is behind it. I honestly don't know. So whether that's maybe there are patterns that are being caught by market makers. For example, if I look at the session patterns, that we have very oftentimes where the first. Well, we know that by the first 3 hours of the session that 83% of P1s are being put in on Bitcoin.
No, last 6 months is 91%.
91%?
Yeah.
That's crazy. So you could argue that that's a market maker strategy, but it would be assuming. I have no clue. Maybe it is. Maybe it isn't. Maybe it's just a composite of people being degenerates in the first half an hour of the trading session, and it's just map psychology. It's very hard to say. I guess we come back on the same question then of last year. Why does it work? And the honest reason is I don't know what the reason behind it is. I just know that it happens and that it happens like that. And yeah, who knows why? Could be market makers, could be degenerates.
But I don't know, to the people who are viewing this podcast, the vibe with you in a room just changes in terms of I don't care. It happens what happens. I'm talking a lot to Ilko, going into rabbit holes and I don't know what kind of theories, but basically you don't give a fuck. It's there. Yeah, almost like a robot.
Yeah. You become very monotone when you start liking data,
Yeah, that's also what I really like about data and statistics. What I started liking about it really takes away not all emotions, but almost all emotions,
It's kind of
Peace of mind.
Yeah, it's comforting. It's good for your heart, I guess.
Yeah, it's very, very much a peace of mind, yeah.
You should hear my girlfriend and my friends joke about me measuring everything. I measure the humidity in my room, the temperature, make sure it's always classic.
You do that?
Yeah, definitely. I measure my heart rate now with my Whoop. No, I love data. I just they always make fun of me about it.
He's not a data geek. He's
my mom is worried.
Freak.
Yeah. No, I really am a nerd. My mom is worried that I measure too much.
I can understand your mom. But let's not get off track too much.
Yeah.
You're a builder in the space. You said it often. But I heard some rumors that you're a pretty good trader as well. What would you say? So talking to you about the trader, how do you trade? What are your successful trades? What is your trade setup that looks best?
Well, right now, my I wouldn't call it trading. I call it investing more. It's a very long-term swing trading, because at some points, also the discussion we had last year, I really, because I built Brighter Data myself, it was so busy that I was like, okay, either I'm going to trade or I'm going to build Brighter Data. And then I decided, okay, I'm going to build Brighter Data. But I've still been active in the markets, obviously, but on a very high time frame. So, for example, the last times I was really active, as in doing something, was, for example, on the dip of 74K. So that was the last big correction on Bitcoin.
Like April?
April,
yeah.
Indeed. Also on Ethereum. So that for me, those are for me the things the moments that I get active, as in that I start accumulating more. And the time before that was with the 50K dip in the year before.
By that, you probably beat us already. So in terms of that trading, but you had money, so apparently, so you had cashed out before at some point, I guess, from that dip from 50, you cashed it out, so you had some funds again to deploy again at the
a little bit, but most of it I keep in, because most of it is just a very long-term play where I'm just like, okay, I'm accumulating local bottoms, and it's local, because obviously it's a very high time frame, and my main plan is to sell everything at the end of the bull market, and I don't believe we're there yet.
Me neither.
Oh, well, again, we'll get to that in a second.
Yeah.
But that's the trading that you do. There's no in between sort of swing trading, a little bit more active.
No, because I am getting more active again in it now that I'm managing Brighter Data a bit better. Because I'm really pulled towards, especially now that I'm like I said, I'm building some systems and they look very promising, and I think it's very exciting to start using them again. So before I was active mostly on the now I'm getting active mostly on the weekly time frame, so to say, which is going to be my weapon of choice, because I think it provides a good mix for now between building brighter data and having enough time to to build brighter data and to also do some trading on the side. So for example, for me, that will mostly be being active on Wednesdays and Thursdays, letting Monday and Tuesday play out, letting the market gather some data. It's the same as with the daily time frame. You don't get active, at least if you use the statistic we're using in the first 6 hours is not enough. There's not enough data yet. So then Wednesday, Thursday is kind of the sweet spot. And that's where I go. But like my main activity in the last 1 or 2 years, yes, has been that time frame of just being very patient, waiting for high time frame bottoms. And that is the most difficult part, right? Being patient. But high time frame bottoms, at least once until now, I've been able to nail very well. And the thing that helps a lot as well with being patient is building brighter data.
But that's investing you. So you don't sell.
That's why I say.
So the extra funds that you deploy are from your, I don't know, other funds, let's say.
Yeah, more or less. I know I have sold. I have sold at local tops, but not that much, because for me the main play. So I have done that, but the main play is selling everything at the end of this year.
Okay, yeah, okay. But
this is a very high time frame.
But what I hear you say, it sounds like music to my ears for people with very little time. A weekly time frame, Wednesday, Thursdays, which means a good eye for the charts and with the data, but hitting the button only very rarely, but still make profit. I know. Yeah, that's what you do. That sounds so much better than my sort of nervous, trying to do everything sort of.
Well, I don't know. Well, first of all, I don't want to be disingenuous, right? It's not like I'm fully doing that yet. I'm just transitioning in that again, because I was only recently that I started having more time. So I don't want to sit here and pretend that I'm like this full time. My main occupation is a builder. I stand by that. But to your argument is that yes, it sounds nice, but I think there's also something to be said for scalping, for example. It really depends. Because, I once had this argument and it really stuck with me. Someone who was a scalper, because I said, well, you have to spend so much time scalping. And he said, no, it's not true. Because with swing trading, the thing is that or day trading, I have to be present at a certain moment of the day. And I don't know when that's going to be. So, for example, say I'm looking for this setup on the daily, then I might have like a 1 hour window, but I'm just out for a walk and I cannot execute. So you're kind of caught to the charts. And then he said, for me, I have total freedom because I just sit behind my computer for 2 hours in the morning. I scalp, I take away money, and then I'm gone. So
that's because those low time frame movements are there every day, every moment. That's basically the thought behind it.
Yeah. Well,
And it trades during certain hours. Where there's a lot of
there's many more opportunities on the lower time frames than is on the higher time frames.
It's a good argument, actually. That's why we do this podcast. To get these kind of like, yeah. Okay. Well, would you ever consider a sort of, maybe under, the house of a certain other, firm to do a sort of Sergio Tesla's high time frame swing trade course? I would definitely be interested in it. But that's something.
Maybe we'll do a bot course when the time comes.
Okay, I'm interested in that as well. Yeah.
So is the trading you're doing right now, is that bot related? Are you testing the bot, the system?
Some things, yeah. We started actually with Yip. We're testing a system now. We've been testing it for 2 months.
Yeah,
and it's looking very
back testing it as well, and it's very promising.
Very promising, yeah, very promising. So that's in the end, that's my goal. My goal is to move everything towards bot related trading.
Okay, so let's break this down for the non clever brain like that people. So a bot is basically you give it certain parameters.
Yeah,
you determine a range. And sell, buy, sell all the time.
No, that's a grid bot.
It's a grid bot.
It's a grid bot. Okay. So if you trade, for example, say you trade on the daily time frame, then what basically is that you are an algorithm because you have a strategy that you came up with. So say, for example, it is I don't know, you have a liquidity pool towards the downside, and then at some point you create a fair value gap towards the downside or towards the downside, and then you wait for a retracement in the fair value gap, and that's when you short. That's after a break of structure or something, that's a system. So you have your system and you are the algorithm that executes the system, right? Because in your head, you're like, okay, you have this set of conditions. Okay, if we have a liquidity pool and then we have a fair value gap and then we have a breaker structure, then you have to trigger. So it's like, just if then coding, then you have to trigger and you short. So you're the algorithm. What a bot is that it simply replaces you as the algorithm. So in that, you just program that into a computer program where you say, okay, these are the conditions. Actively
triggers.
Yeah, these are your triggers. Actively monitor for this situation. And if this situation happens, click. And that's what it does.
But
Predefined.
Yeah, predefined. Or, well, depends on how you say predefined, but the triggers are predefined.
Yeah,
yes.
right. Yeah.
And the triggers can be based on structure, but it can also be based on volume. There are some guys that I know that are running algos based on volume and delta,
Mm-hmm.
So when certain amounts of volume enters the market, the algorithm recognizes that and they pull the data from TradingView, from different exchanges,
All right.
and then it just executes trades. There's many different strategies out there. The big players, they use algos
Mm-hmm.
and they don't share it with the general public.
Of course
Because
not.
if you would,
I know.
it's
Yeah.
the market. Yeah,
You would drain the market.
yeah,
It doesn't work anymore.
It doesn't work.
It doesn't
anymore
work
because
anymore.
you can't drain the market because if someone is gonna get paid, someone has to pay the
Yeah,
individual
sure. Yeah.
at all
There is
times. So if we figure out if our strategy works the way that we think it's gonna work, we already discussed. We're not telling anyone because it doesn't make sense.
But then why you need it? Why do you say you need a? Well, you're going to offer a bot course. Are you onboarding or not? That's the only thing at the time.
Oh no, man, I was just joking. I've no clue what it's gonna look like by then. Yeah, no. I'm gonna make the data accessible for the bots, but I'm not gonna build a course to say like, okay, if you like create the bot with this and this and this strategy, you're gonna be paying money.
Okay.
Because by definition that wouldn't work because like Yip said, it's a zero-sum game. So I'm not helping anyone because if everyone signs up for the course and everyone starts using it, it won't work anymore.
Okay. That was just.
Yeah, no.
It was a nerd joke.
It was just little. It was a joke, yeah.
Okay. So let's talk a little bit about. Let's talk about Ethereum. I think you have a very special relationship with Ethereum.
Yeah, love hate.
Yeah, I think there was a tweet from you that made me laugh, and that was not just geek humor; it was actual humor. So well done. But it was a certain run. I think you call it the 4484 run.
Yeah, 4448.
That one. And it gave you special endurance. Okay. Explain me again what it was and how it helped you to
I
prepare
think the tweet
for
was something like I finished the 4448 a while ago. You run 4 miles every 4 hours for 48 hours straight. And the purpose of it is to give you mental strength.
Did you do that actually?
I actually did it, yeah. And now mental strength. And I finally know what I finally know what it prepared me for. It prepared me to be an ETH holder. But this was at the time when ETH was down the drain, So it was not cool to be an ETH holder.
No, it was not cool.
Yeah, no.
but this should be a parameter for your bot. When you feel this, just regardless, click.
Yeah, no, that was
that was
a tough time.
But that was when ETH was around 1,200 or something like that.
Yeah, it must have been something like that. Yeah, it was low. Maybe it was in the downturn. It was in the time when it was very disappointing and
it was horrible.
It was horrible. Yeah.
Well, not if you look back and you can say you picked the absolute bottom, but I think you didn't do that. You were already scaling in from a lot higher, right?
Yeah. No,
just make a little bit.
Well,
more
I already had it, but then I started scaling again because at some point my thesis was this was I think when Bitcoin was at 74K. Because I was mostly charting Bitcoin, and then I was like, okay, Bitcoin is not gonna lose 74K. Was my thesis, and I was pretty confident in that. And at the time, I remember there was a lot of controversy towards it because the world was melting down. There was an economical crisis looming with the tariffs, but anyway, I was pretty confident. So I was like, okay, if Bitcoin's gonna hold, Ethereum's gonna hold as well. So I'll probably place some bits there as well. So I placed, but I was already heavily invested into Ethereum at that time. But I placed then because I was like, okay, I'm gonna swing that. And I placed bits at 2,800, my first ones, and just nuked it. Right? just absolutely nuked it. But Bitcoin held the low, but Ethereum just kept going down. So then it went all the way to 1,400. So then I think I bought again at first at 2,500, and then I saw, okay, this is going much lower because it created like a very poor low. And then I bought once more at around 2K or something. So it was far from ideal on the entries there, but. I learned a valuable lesson there that I should have paid more attention to the ETH BTC ratio at that point, which was very weak. But yeah, in my mind, I was just okay. If Bitcoin's gonna hold this low, there's no way Ethereum's gonna absolutely
which
nuke
makes
it.
sense as well.
So yeah, that was a good lesson. But
this sounds almost like a newbie conclusion for someone who's that intelligent, like, pay more ratio to the ETH BTC ratio. Yeah, well, I'm not, I'm not the guru here, so I mean,
well, I think ETH BTC, I was paying attention to it. Maybe I shouldn't say it, but I was also like, I was figuring it was an okay place for a potential bottom, and I knew that I wasn't trying to catch the exact bottom. I don't do that with these plays. I usually just ladder in over a period of time on a higher time frame. But yeah, you're right. It was let's just say you're never too old to learn. It was a newbie conclusion. I really learned.
We know that. We know that. We never enough too old to
know
learn.
the feeling.
My daughter said, I was sitting on the couch with my phone. Hey, Dad, how many years are you already trying to work out how that works?
Really?
Yeah. Shut up.
I like your daughter.
Yeah. I did not at that time because it was painfully true indeed. And my wife is at least, happy that I'm not chasing girls, so she's okay with me, sitting on my phone looking at cars. So that's absolutely true. That's absolutely true.
Different story.
What happens in but your ETH story continues, of course.
Yeah.
Because
We're not done yet.
we're not. No, but that's also that's me sitting. I'm safely sitting behind either microphone or somewhere in the anonymous cryptosphere, and I'm looking seeing these tweets, and I think, haha, loser. But in the end, I don't buy. Price shoots up, and I fuck.
Yeah.
So well done on you. We're now at, where is it? 38, 39, 4?
For
Around 4K.
Around 4K.
So
Running now.
range
Yeah.
high.
you're pretty well. But now you then, obviously, the general idea on Twitter is, this is the top. Distribution, it's all over. Sell now.
Mhm.
But you're not yet.
No. I mean, in the end, I'm not saying I'm going to be. I think it's most important that you have a defined rule set for yourself and a defined system. So maybe I will be wrong, but I'm keeping an eye. I obviously have confirmation. For example, we've talked about this before. The fact that Bitcoin may or may not be distributing. I think not, but I do have confirmations for myself where I will say, okay, maybe I'm wrong on that idea, and we are distributing. In which case, I'm probably exit. Yeah, I will probably exit with at least a big portion of my holdings. So I'm open to the idea of being wrong, but in the end, my current system is telling me that we're not at the top and that we're not at an all-time high, or at least that we still need to take the all-time high. So yeah, I'm not selling yet. But I will say that if we get, and I've talked with Yip and Jack is on, there's I think there's 3 camps right now, which is the one camp is saying like, okay, Bitcoin is distributing right now, and we either put in the top or we are close to putting in the top. There's the other camp, which I'm in, is saying like, okay, we're close to the top, and we're in a 4-year cycle, and within this quarter or the next quarter we're going to put in the top. And then there's the camp where it's where they say we're in the paradigm shift has happened, we've changed, and we're going to go up much longer and much higher.
Yeah.
So those are the 3 camps. I'm personally in the middle, but I think all 3 have merits, right? It's the markets are very complex, and I'm open to the other ideas. But right now, my main conviction and my main bias is the 4-year cycle, and that didn't put in the top in yet, but that we're close, and that's what I'm playing on. And in the end, like I said, I think there's merit to the other ideas, but you have to have a system and stick to it. And it's my system is telling me we're not there yet.
But I learned that the 4-year cycle is dead.
No, I don't completely agree. I think it's also good to say that the 4-year cycle, when I say 4-year cycle, I think a lot of people say, yeah, but like the having this and having that. And I completely agree. The having doesn't matter as much anymore as it used to. But when I say the 4-year cycle, I don't mean the 4-year Bitcoin cycle. I mean the 4-year liquidity cycle, which has been around. That's like a macroeconomical concept, which has been around for much longer than just crypto. It basically displays what happens with like debt and capital over the global landscape. Basically, how much money is being pouring into the market, pouring out of the market, and that kind of, if you look at it, there's charts and formulas to do it, to measure it in a very simplistic way. You can see that every 4 years it kind of goes like this, and this has been around for like much longer than just crypto. So that's what I mean when I say the 4 year cycle. So I don't mean the 4 year halving cycle, because I agree. Then we come back to the point. It's that would not be enough to formulate a very solid thesis on. It's the same as with when I see people say, okay, there's a bullish or a bearish debt cross on the weekly or something. Something that has happened twice before. It's obviously not enough to create a thesis on, saying like, okay, well, it happened every time it happened. The last 2 times it happened, so it must happen a third time. That's you cannot really say that. It's like, you flip a coin twice, it lands on heads twice, and say, well, I'll land on heads again. Like, we know it doesn't work like that. But the 4 year liquidity cycle is much older, and it's also happens in commodities and equities.
But then
so that's what I'm
with the 4 year liquidity cycles, you often also tend to have 4 different cycles who tend to be the same, and then afterwards you have a longer period of slow market or bear market. That is also a theory that is in which the fourth of those 4 cycles also tends to be different. So either shorter or longer than the previous 3 ones. Not always, but it happens, So that is also quite interesting, and that is what me and Jackie's were discussing as well.
Right.
In which I'm leaning more towards a bit of a longer cycle, so maybe like Q2 2026, Q3 2026, which I'm very open to. But also, like Marnik's also saying, it really depends on the next two months, I would say.
Yeah.
Well, again, why? Why doesn't the next 2 months? That's when it's over, then the 4 months?
No, because I think depending on what so for example, there's a couple of scenarios that we're keeping in mind that we talked about last time as well. Say, for example, the next 2 months, Bitcoin just does pretty much what it's doing now. It's just ranging, and then it slowly starts staircasing up. I would be more inclined to say, okay, the prolonged cycle is going to happen. If, on the other hand, for example, price now nukes, goes down, basically does the distribution kind of thing, then goes back again, tries to attack the high one more time in the end of the year, then I would be more inclined to say, okay, this is distribution, and indeed, it's not looking too good. If then on the other side, or what is happening is that we now just put in a low somewhere, I don't know, in the early next month, and then we just absolutely start sending it towards the upside, say like just complete euphoria on the markets, then I would say, okay, the 4 year cycle is intact, and we're gonna nuke down from it. So that is actually one of my main triggers that I want to see for the 4 year cycles. That I want to see that euphoria, and I don't think we've really seen it yet, especially with the altcoin market, right? Most people are very
even with the distribution scenario. Up on that bounce where it attacks the high one more time, Ethereum will probably outperform Bitcoin, so you can still get some kind of euphoria.
Yeah, then we would need to see it in the altcoin market.
Yeah, exactly.
But we haven't seen it yet.
No,
not at all. Just disappointment.
Yeah, or retailers are really too embarrassed to say that they're in crypto, and they're not showing it.
That could also be. That would be like my girlfriend who bought Luna.
Luna.
Yeah, exactly like that. I've helped people, setting limit orders in Bitfavo, but when I was helping someone to set a limit order, 2 other people came as well. So it was sort of me for a signal, but hey, that's only that's not data driven, of course. There are people out there, but they're just too embarrassed. And do you believe in the blood moon, or what did we have a couple of weeks ago?
Oh yeah, no,
blood moon.
No, not. I guess that's the indicator of when there's a blood moon. Or is it? What is it?
I was hoping that you knew exactly what it was, but
I don't know.
But there was a blood moon, and it was either high, low, or reversal, or I don't know. It was something.
Okay, yeah, like an astrology thing.
Yeah.
Yeah, no, not really my thing.
Yeah, that shows. Okay,
maybe maybe I'll implement it though, because might attract different target group. No, okay, it's not my thing.
New business models come up here, so
yeah. Who knows?
Never say never. Are you still in your ETH long, Yip, at this time?
I am.
But where's your invalidation?
below. Don't know the exact number, but it's below like the low of that last leg to the upside, right? You see?
Yeah.
So
Okay.
this slow grind up, leg down, leg up, and now we are correcting. It's below that low of that last leg to the upside.
Yeah,
I
I
don't
know.
know
Yeah.
the exact number to be honest.
Good enough.
I've been in the long for a couple of weeks now already, so my
Still running.
my not all my orders have been hit yet, so I'm fine. If it continues down, I can see like even if next month is gonna be a bullish month, it will still need to create a wick to the downside first. So I'm assuming that Ethereum will still go a little lower, whether it's this month or early next month. But yeah, I'm really liking the Ethereum and also Solana chart, by the way. And those are the two biggest altcoins. So if those charts are, to me, as per my strategy, showing strong signs of potential range breakout, all they basically need to do is trade back above the current yearly high, and then range breakouts are on both of them confirmed. They will absolutely full send. There's if that happens on a time frame like that, in my opinion, as per my system, talking about probabilities, there's a very high probability that that it's gonna full send.
Estimated
Yeah,
probabilities.
and then if Ethereum and Solana full send both up on a range breakout like that, and those ranges have been forming for a very long time, and then the entire altcoin market, in my opinion, will follow. So as long as those range breakout models continue to play out and give me that final trigger, I'm chilling.
Marnik, we ask people who come here, our guests, to bring a object that holds some significance for them. What did you bring?
Yeah, I maybe a little cliche, I don't know, but I brought a watch. It's a nice watch, but the meaning behind it is nicer. I got it from my dad. My dad passed away, unfortunately, 4 years ago, and I got it on his 60th birthday. So on his 60th birthday, my dad threw a very big party, and he told everyone, "I don't want to get any gifts from anyone. I am only going to give gifts. This is going to be the birthday of giving, not of taking." So he bought gifts for me, my two brothers, my mom, my aunts, my uncles, my cousins. Just everyone got gifts. So it was very nice, and he had a very nice speech on his birthday as well. And he, for example, said, and I never forgot it. He, so it's a symbol for me of trying to give rather than to take. So, and he lived his life by it. For example, in his speech, then he actually said that. He said, first of all, I could have been greedy and I would have been a lot richer, but I've also would have been a lot unhappier. And he also gave some very nice advice that I never forgot. He said, life is too short on that birthday as well. He said, life is too short not to try and get everything out of it, but it's long enough to keep on practicing having patience. And he said it brought me a lot. So it's just a very nice symbol, obviously, of, remembering and honoring my father, who's, I was very close with him. And just, the values and the norms he stood by, like, giving rather than taking. And he used to always say, this is a Dutch saying, in Dutch, we say, when you divide, so 2 divided by 2, we say share, right? 2 shared by 2. He said, if you cannot share, you also cannot multiply. So it's a very nice symbol that I carry with me. And then, my dad is always with me.
My mom always says that as well.
Oh, yeah?
Yeah.
It's a good saying.
Good
Like it.
story.
Love it, man. Thanks.
Yeah.
We go towards the other format that we have this year as our standard format, which is the quick question round. Ilko, I think that's up to you to start.
Yeah, I'm going to start. So,
Right.
first one.
Okay.
Who is your hero?
Oh man, I'm gonna get so much shit for saying this online, but it's well, obviously my parents, but also if I have to not do it, Elon Musk.
Elon Musk.
Yeah,
I saw it coming, and
Yeah.
all the shit that you get is probably right.
Yeah,
we asked you,
yeah,
so
yeah.
That's okay.
Yeah.
And my girlfriend and my roommate are mocking me so much with it. So
It's
I'm
all
gonna make
good.
sure they don't watch this.
It's all good.
So the Tesla has a lot of meanings for you.
Yeah.
Probably there, yeah. Who should we follow on Twitter?
Astronomer.
Astronomer. I do follow him actually, and I see why.
Yeah. Great. One of the best on Twitter for me. Also loves data. But yeah, I think he's amazing.
But he has some on his chart. I think that he has some astrology terms, or do I?
No, not at all. It's just it's pure data and pure. I just think he's really one of the real ones. He's like Yip. He's like very transparent. He calls everything live, calls everything in front, and he just uses a lot of data. I think it's just very cool that someone like that, who's clearly very intelligent and very successful, just shares everything. Takes so much effort to share everything and explain everything, because he writes this kind of post. So
Right.
I have notifications turned on for him, and I actually hope to involve him in the next feature we're gonna make. I think he's great.
Good stuff, man.
What Portuguese song should we all listen to?
Man,
Oh, what's the party called again when I was in Lisbon?
it's Santos.
Santos.
Yeah.
Santos.
But that's like, man,
Carnival.
I have to be honest, I don't know any title from Portuguese song. It's very embarrassing.
Really?
Yeah, I know. There's a lot of that's like the music they have there is pimba. It's basically Dutch carnival music, and it's just dirty songs. But then in Portuguese, you wouldn't say it's a very Catholic country when you know the meaning of all the songs. So any one of those songs, I would say, if you want to have a little dive into Portuguese culture.
Right.
I think that's what you did as well, right?
Yeah. That's what I did. Yeah, not anymore though.
Only
You
when
pulled me away from it. I was actually at Santos, but then Jip was in Lisbon, and he pulled me to this fancy bar and stuff.
We had a great night though.
We had a great night though.
Yeah, I remember a vlog from you where you were very early in the mornings, something like that. Anyway,
Possible.
Yeah, possible.
kindly complete this number for me. 3.14,
Mm-hmm.
number pi.
Yeah.
How does it continue?
Oh man, I have no clue. No, I'm not
Yes.
that much in mathematics.
You got him.
Yeah, you got me. It's funny because my girlfriend asked me the same question the other day, and I failed it as well. So I should have, because she knew like the first 4 or 5 numbers.
I like your girlfriend as well. That's how that's
Yeah.
good stuff. Wow. Yeah.
Yeah, so the final question, it's a yes or no answer
Okay.
in this case, which should be rather easy for you because we already discussed most of it.
Yeah.
But here we go. We will see Bitcoin at 130K within a couple of months.
Yes.